Mm. Hi guys. So sorry for all of you. So in the yesterday there is no possibility of taking the class, and today also we are going to start at 7 p.m. So sorry for the inconvenience, all the things. So from today onwards, regularly we can start the sections. So we can continue the schedule from today onwards without any interruption. So tomorrow onwards, I will start with 6 o'clock only, 6 p.m. So let us start the class regarding to the AS10, a very most important standard. Including this AS10, I'm going to discuss about the depreciation also. So totally the weightage of this standard, we can get 7 marks plus 2 marks MCQ. So totally nearly 9 marks from this standard straight away you're going to get, because we are going to discuss with including depreciation. Good evening, Amma. Good evening, Upendra. Okay. So first of all, before going to start this AS10 property, plant and equipment, we need to see. Thank you, Funny. Hi. So we need to see the types of assets. I think, do you know the types of assets? Can you say the types of assets, Amma? So mainly we are having the two types of assets. First one is called as current asset, and second one is called as non-current assets. Okay, now what is the meaning of current asset, guys? So current asset is nothing but having a benefit of less than 1 year or within easily we can convertible into cash. So the thing is called as what, ma? Current asset. Sir. No. Happen. Okay, sorry guys. Okay, we're going to start once again. So what are the types of assets are there, ma? Totally we are having the two types of assets. First one is called as current asset and second one is called as non-current asset. So what is the meaning of current asset, ma? Having a benefit less than 1 year. What is the meaning of non-current asset? Having a benefit more than 1 year. So nothing but easily convertible into cash means it is called as a current asset. Not easily convertible into cash means it is called as a non-current asset. Some of the students may call it as non-current asset is called as fixed asset. We may call both the names. So here one coming to the non-current asset. So we know straight away current asset is not a PPE. So non-current asset is only the PPE. So here when coming to the non-current assets, we are having the types of assets. So first one is called as tangible asset. Second one is called as intangible asset. Third one vesting assets and biological assets. When coming to the tangible asset, you know what is the meaning of tangible one, which we can see and touch and having a physical form of existence. Example, building, plant and machinery, furniture, like that. So next one, intangible asset. What is the meaning of intangible asset, Amma? So having no physical form of existence, but with the help of that, we are going to generate the future economic benefit. So that one is called as intangible asset. So examples are called as copyrights, patents, goodwill, trademark, etc. Knowledge. When coming to the vesting assets, what is the meaning of vesting assets, ma? These assets having a limited useful life, and once they have used, they cannot be replaced. For example, natural resources like oil wells, core wells, bore, etc. When coming to the biological asset, what is the meaning of biological asset, ma? So living plants and animals that a business owned and used for the agriculture produce is called as what, ma? Biological asset. Nothing but plants, like any plants, any type of plants, and hence poultries. So buffalo, sheep, like that is called as what, ma? Biological asset. So there is a slight difference between the biological asset and bearer plant. So what is the meaning of biological assets, sir? A living plants and animals used in the agriculture activity to produce the agriculture produce for sale. So here, what is the meaning of bearer plant means? It is also a living plant, ma. It is that is used only for the bear produce. For example, if you take the example of orange, mango, mango tree. So mango will produce the mangoes. So here the mango tree is the barrel plant. Bear means what? Mango. They will produce ourselves over several years, not for the sale itself. So to conclude, a final conclusion is a company grows a sugarcane to sell. Okay, now if you want to sell the sugarcane means total plant we need to cut it off. The plant itself is the sugarcane, the end product. So if you want to get the sugarcane means there will be no plant. A company is growing a mango tree that produce the mangoes for every year. So here, in order to get the mangoes, no need to cut down the tree. Yes or no? Like if you take the wheat, if you take the wheat like that also, if you want to take the wheat, we need to cut it off the total wheat plant. So if you want to cut the total tree means it is called as a biological asset. So without cutting a tree, we are going to get the agricultural produce means it is called as a bearer plant. So with the help of that mango tree, we can get a produce more than a year. When coming to the harvesting, what is the meaning of harvesting, sir? At the final stage of okay now. So this is in this year only the mango tree will give the mangoes. In the next year onwards, the mango tree will not give. At that point of time, the mango tree is a biological asset. So what is the meaning of biological asset, sir? So the plant which is producing the agriculture produce, no need to cut down the tree by way for using that agriculture produce, that is called as a biological asset. If you completely cut it off the tree means it is called as biological asset. So biological asset is not covered, not forming part of the PPE. When coming to the bearer plant, it is covered in the form of PPE. So these are the types of assets. So here the PPE means, so not a current asset and not a intangible asset and not a vesting assets and not a biological asset, but biological asset excluding what bearer plant. So already for the intangible asset, there is a separate standard called as AS26 and already for the biological asset, there is a separate standard called as AS41. So now we are going to discuss about the PPE. So will be covered only what only tangible fixed assets are covered in this standard of PPE. So now we are going to discuss about the definition of the PPE. So this material you are going to get after the discussion of this class. So no problem about this. So this thing you can see here now. What is the meaning of property, plant and equipment, sir? Property, plant and equipment means it is a tangible property held for a organization for use in the production or supply of goods and services, for rental or other for administration purpose. So here the property, plant and equipment means what tangible or intangible? Tangible fixed asset which we can use for administration purpose, rental purpose, a supply of goods or rendering of services. So what are the four activities we can use For the purpose of production, we can use that particular asset. For the purpose of supply of goods and services, we can use that particular asset. For the purpose of rental also, we can use that particular asset. And for the purpose of administration. Sir, for the purpose of production means, imagine we have started the manufacturing of bicycles. For that manufacturing of bicycle, we need one building. Okay, now for example, in that building only we have started the production. So that building we are going to use for the purpose of production. For that reason, building is called as a PPE as per the standard AS10. For supply of goods and services, for example, if you take the Shikara, in this building we are going to provide the education service. This building is called as what This building is as PPE as per the property, plant and equipment. Or any other administration purpose. For example, for administration purpose, we have taken a one block of building. And again, the building is forming part of what PPE as per accounting standard number 10. We can use that particular asset, whether if you want, you can use for administration, production or supply of goods or rendering of services. Expected to be used during more than a period of 1 year. This 1 year we need to consider from the end of the preparation of balance sheet. So next one, not held for sale in the normal course of business. The objective of this asset is not for held for sale. By way of using that particular asset, we want to sell the products. So we should not directly sell the asset. By way of using that particular asset, we want to sell the goods. So the three meanings totally combined, we are going to call it as what meaning of property, plant and equipment. Because of this one only, what are the assets are covered in this standard The assets are covered in the standard is nothing but what ma? Non-current assets only tangible and intangible ma? Tangible. They said that's tangible. So for the intangible, there is a separate standard called as 26. And when coming to the vesting assets, will also be not a forming part of PPE. When coming to the biological asset is also having a separate standard 41. So will not be covered here. But excluding what ma? Bearer plant. Now we are going to see the definition of the bearer plant. I think you got the clear picture about the bearer plant ma. Bearer plant is also one of the biological asset. Okay, now used in the production or supply of agriculture produce means biological asset, but what ma there? More than a period of 12 months. So if you want the wheat means what they will do ma? We need to cut off the total tree. If you want the tea bushes means, if you take the tea bushes example, from the tea bushes we will cut off what ma? Only leaves. We will not cut off, we are not going to cut it off the total tea bush. Okay, now tea bush is also called as what ma? Tea bush is also called as a bearer plant. And in a remote, it can be sale like agriculture products produce except in a incidental scrap. So whatever the produce we are getting from that particular product, from the particular bearer plant, we have to produce like a agriculture produce. We want to sell like agriculture produce. So what is the best example of bearer plant ma? The best example of bearer plant is a mango tree, coconut tree. So whatever you can take, apple tree, tea bushes, etc. So however, this standard does not apply to the produce of the bearer plant. What is the meaning of that one? This standard will be applicable on the mango tree, will not be applicable on the mangoes. Okay, Nama. So this is like I am going to end up with the meaning of bearer plant, and I am going to end up with the meaning of property, plant, and equipment. Is there any doubts, ma? Finally, I am going to repeat once again. Property, plant, and equipment means tangible, fixed asset. It is not an intangible. It is not a biological asset. It is not a vesting asset. Okay, now what is the meaning of vesting asset, ma? Vesting asset means natural resources like coal or gold fields, coal mines, quarries, etc. Okay, now not covered in this standard. There is a separate standard. Are you getting the point, ma? So next, what is the scope of this standard, sir? Scope means what, ma? Non-applicability. This standard is not applicable to the biological asset. Already we have discussed related to the agriculture activities other than the bearer plant. That means covered for the bearer plant. Vesting assets including the mines rights, expenditure on exploration and extraction of a mineral, oil, natural gas, and similar other non-irrigatives. Okay, na guys. So here this standard will not be applicable on biological assets, vesting assets, intangible assets also. This standard is not applicable. Okay, na. So here when coming to the main object of this standard, we have to discuss about the recognition principle, and we have to discuss about the measurement principles. So what is the meaning of recognition principle and what is the meaning of measurement principle? We can discuss clearly, ma. So in order to know this clear substance, we have to see something. So AS10, mainly recognition. Can you say the meaning of recognition means? The meaning of recognition is nothing but at what amount we have to record in the books of accounts. So initial recognition is there, subsequent recognition is there. What is the meaning of initial recognition, ma? Initial recognition means at the time of purchase of an asset, whatever the amount we have purchased, that amount only we have to recognize. But here in the place of initial recognition, we may purchase the asset by way of giving the cash, by way of giving the consideration in the form of cash, by way of giving the consideration in the form of other assets, by way of giving the consideration in the form of shares. So initial recognition having two considerations: consideration in the form of cash, consideration in the form of other than cash. What is the meaning of recognition, ma? At which amount we have to record in the books of accounts. Now, how many types of recognitions are there? Initial and subsequent. When coming to the initial recognition, how many situations are there? Two situations. Consideration in the form of cash, consideration in the form of other than cash. So consideration on exchange of other asset and consideration on in the form of issue of shares. So to conclude, totally we are having the three situations, Amma. In the form of cash, in the form of giving the another asset, and in the form of giving the shares. First, we are going to discuss about the first point. We have purchased the asset by way of giving the consideration in the form of cash. How to value that particular asset? So easy, Amma, I will say you. So we have to see the following steps. So initial recognition, subsequent amma we are going to discuss. We are going to discuss about the initial recognition. So property, plant and equipment initially recognized at which price amma? Cost price. We know original cost of the asset we have to record. So it should be calculated as follows. In the case of consideration paid in the form of cash other than cash amma, in the form of cash. First we will take the initial purchase price. So what is the meaning of initial purchase price ma? At the time of entering into the shop, okay now we have seen one particular bike. Okay now they have told us the particular bike cost is equal to the 2 lakhs. The 2 lakh is called as what ma? Initial purchase price. And then they will give the discount na. The discount is called as what ma? Trade discount. What we need to do? We need to reduce that particular trade discount. And then what we will get ma? We will get the actual purchase price. So initial purchase price minus trade discount, we are going to get the actual purchase price. From there, if the government grant given now, what we need to do? We need to reduce the government grant. Okay now, you will get a clear picture about the government grant in the next standard amma. Okay now, government grants. So AS number 12, we can discuss about the clear picture. As of now, we have to reduce the government grant from the particular asset. And then we have to add back the freight. So what is the meaning of freight means here? Up to the put to use of a asset. For example, we have incurred the traveling expenditure. The traveling expenditure means what ma? The traveling expenditure without the purchase of asset, the traveling expenditure will not be there. For that reason, the traveling expenditure is called as what ma? Capital expenditure. We have to add back to the particular asset. Add back the non-refundable taxes. We are not going to pay the not only the cost, not only the price of that particular asset, we have to pay the taxes. If it is a refundable tax means what we need to do ma? We need to do reduce. If it is a non-refundable tax means we need to do add. And next one, all the direct expenses. What is the meaning of direct expenses, sir? The expenditure incurred up to the put to use of asset is called as a direct expenses. So if you want, you can see here. The direct expenses means any expenditure incurred from bringing the asset into the current location and condition. So condition means what ma? Ready to use. Up to the ready to use. For example, if we take the purchase of air conditioner, we are going to purchase the one air conditioner costing 40,000. For that, so in order to bring the air conditioner to a work location, we are going to incur the traveling expenses. So we need to add back that traveling expenses. And after that, for installation also, we will incur certain amount. That installation is called as what ma? Direct expenses. Whatever the expenses which are incurred up to the put to use of asset is called as what ma? Direct expenses. We have to add back. And we have to add back the present value of demolition charges. In the before day itself, we have discussed about the present value. So what is the meaning of present value ma? Demolition charges will be incurred at the end of the life of the asset. That demolition charges we have to bring from the present value. So from now, there will be nothing will not be there ma. They will give the present value factor. We have to multiply with the demolition charges. We will get the present value of demolition charges. And next, borrowing cost. So what is the meaning of borrowing cost, sir? For example, we have taken a loan of rupees 10 lakhs for construction of a building. On that loan, we have to pay that interest at the rate of 10%. Can you say what is the amount of interest ma? The amount of interest is nothing but 1 lakh. That 1 lakh is called as what ma? Borrowing cost. The borrowing cost incur for the purpose of building or what ma? For the purpose of building. For that reason, we have to add back that interest cost. Okay now, we can discuss clear picture about the borrowing cost. Some more discussion about the borrowing cost in AS 16. So then ultimately what we'll get the cost price. At that cost price only we have to record in the books of accounts. So this is called as initial recognition or subsequent recognition amma. Initial recognition. Okay na guys. So I think do you got the clear picture about this one? Initial purchase price less trade discount less what ma? Government grant. If it is a refundable taxes means that is also we need to reduce. Non-refundable taxes add back and add back the freight, non-refundable taxes, all the direct expenses and present value of demolition charges and the borrowing cost. We have to adjust these all the things. Then ultimately what we'll get ma? We'll get the cost price of PPE. This is the most important point from the PPE. You have to remember these steps. Okay na guys. So for example, I will take one example. You have to say. Guys, ready? Normal price of PPE is equal to 10 lakhs. What is the price of PPE? 10 lakhs. Let us take the example of PPE is equal to the land. Okay, now on that, legal charges for purchase of PPE is equal to 1 lakh. And next, non-refundable taxes is equal to 1 lakh. And government grant we have received at the rate of 50,000. Okay, number. And next. So these are the examples. Can you say the total cost of the asset now? So what we have to do, ma? For the cost of the land, how much, ma? 10 lakhs. And without this legal charges, we cannot purchase the asset. So legal charges means nothing but registration cost you can take. So what we need to do, the registration cost, ma? 10 lakhs plus 1 lakhs. And non-refundable taxes, we have to add back we need to reduce, ma. If it is a refundable tax means what we need to do, we need to reduce. It is a non-refundable tax, what we need to do, ma? We need to add back. And grant, what we need to do, ma? We need to reduce the grant. And last point, I can take an example of last point, ma. So borrowed a loan for purchase of PPE is equal to 10 lakh. And interest at the rate of 10%. Can you calculate the total cost of the asset now? Easy. What is the cost of the asset initially? 10 lakhs plus we have to add back the legal charges amount. What is the amount of legal charges, ma? 1 lakh. And then non-refundable taxes, what we need to do? We need to add or we need to less? We need to add. Add back non-refundable taxes, how much, ma? 1 lakh. And then next what, ma? Government grant, what we need to do? We need to reduce the government grant 50,000. And we have to add back the borrowing cost. How we are going to get the borrowing cost, ma? 10 lakhs into 10%, that is equal to how much, ma? 1 lakh. Can you say the total cost of the asset? So 10 lakh plus 1 plus 1, 12. 11 lakh 50 and 12 lakh 50,000 is the total cost of the asset. We need to record in the books of account. How we can record, ma? We are purchasing the land. What is the entry? So land account debited to, we can take the PPE account debited to cash or bank account. How much amount you need to record, ma? Initial recognition 12 lakh 50,000. Sir, this is the consideration in the form of cash, consideration in the form of other than cash, ma? This is consideration in the form of cash. And next we are going to discuss about consideration other than cash. How many situations are there, ma? When coming to the consideration on the other than cash, we are having the two situations. Consideration by way of exchanging the asset and consideration by way of issue of shares. Here we are having the two situations, amma. Having the commercial substance and not having the commercial substance. Commercial substance means nothing but benefit. Commercial substance means nothing but what, ma? Benefit. I can take the conclusion. Please wait a second. I will give the clear picture. So here we are having the two parties. Okay, now let us take Keshava is one of the person. And who will be the another person, amma? Who is the friend of Keshava? Allu Arjun, Pushpa. So these are the both the friends, amma. So Pushpa is having an ex. An axe in his hands. Nothing but, what is that one? This thing is called as what, ma? Axe in his hands. Axe at the rate of 10 lakhs. Axe at the rate of 10 lakhs. Okay, now this Keshava is having nothing. So business is nothing but Al-Arjun. We are having one axe and we are giving that axe and we are taking what, ma? Table. So that means how we are acquiring the table, ma? We are acquiring the table by way of giving the another asset. Here the benefit is there. Yes or no, ma? Both the parties having the benefit. That means having the commercial substance and not having the commercial substance, ma? Having the commercial substance. So here the both the values are also available. 11 lakhs is also available and 10 lakhs. That means both the assets value is clearly evident. Both the assets have value is clearly evident. At that point of time, we have to give the importance to asset given. So if there is a commercial substance, means which value we need to consider? We need to consider the asset given. So what is the value of asset given, amma? 10 lakhs we need to record in the books of accounts. If there is no commercial substance, means how much value we need to record in the books of accounts, ma? 11 lakh we need to record in the books of accounts. So no commercial substance means asset taken will be considered as a what ma? Initial recognition amount. If there is a commercial substance, means asset given will be considered as a what, ma? Initial recognition. So normally there will be a provision, ma, whichever is clearly evidence. Sometimes we know the available information related to only 10 lakhs, means we will consider only 10 lakhs as an initial recognition in the both the situations. Okay, now whenever this point of view will come into the picture, ma, we know both the assets value, asset taken and asset given. If it is a commercial substance, means asset given will be considered. If there is no commercial substance, means asset taken will be considered. If there is only one value, means that particular value only we should consider as a initial recognition amount. This is called as what, ma? Exchange in the form of consideration, exchange in the form of asset. What is the next one, ma? Consideration in the form of issue of shares. Now what we are doing means we are purchasing the asset and we are giving the shares. We are purchasing the asset and we are giving the shares. At that point of time, what we need to follow, sir? So simple, sir. Imagine this is a business. We have purchased one asset. Nothing but you can take the PPE and we are paying the consideration in the form of shares. Okay, namma. Share value at the rate of 100 each. Like that we are issuing 200 shares. We are issuing how many shares, ma? 200 shares. Okay, now the asset which we have taken is equal to 10 lakhs. It's equal to how much? 10 lakhs. And now imagine how much amount we are going to get here. So let us take it as 20,000. 20,000 shares at the rate of 100 means how much, ma? 20 lakhs. Sir, here both the values are clearly evident. Only one value is clearly evident. Amma. Both the values are clearly evident means we have to take the consideration of shares issued. If only one value is clearly evident means we have to take the consideration of that particular value. Okay, na guys. So 20 lakhs we have to take the consideration. Why, sir? Because both the values we are having a clearly evident. Sir, to conclude, so here we are having the three situations, Amma. We are discussing the recognition of a PPE. What is the meaning of recognition of PPE, ma? Recognition of PPE means we want to record that particular amount while recording the journal entry. How much amount we have to record? That is the point is called as initial recognition. How many situations are there, ma? Consideration we are receiving in the form of, we are receiving the asset and we are paying the consideration in the form of what, ma? Cash. And second one is called as what, ma? We are receiving the asset and paying the consideration in the form of asset. We are giving the like barter system, you can say. And we are receiving the asset and we are giving what, ma? Consideration we are paying in the form of shares. So here in this situation, in the form of cash means what are the principles we need to follow? We have to take the original value. For that we have to add back what, ma? We have to add back the non-refundable taxes, direct taxes, freight, etc. We need to reduce the government grant. We need to reduce the non-refundable taxes like that. When coming to the consideration in the form of we are giving the another asset means both the values are clearly evident means we are having the two situations, having the commercial substance, not having the commercial substance. In the case of having the commercial substance means benefit is there means asset given will be considered. Nothing but whatever the amount you have paid, that thing only you record now. Here also same. So asset given means nothing but we have paid. That amount only we have to consider. Okay now. If only one amount they have presented, what is the meaning of that amount? Here, whatever the amount we have given, what is the asset we have given, that asset cost is equal to how much amount? 10 lakhs. So normally we have to consider this thing only in the case of having the commercial substance. In the case of not having the commercial substance, which value we will consider? Only 11 lakh we will consider. So some of the times we may have only 10 lakhs or we may have 11 lakhs. At that point of time, which value we need to consider? We need to consider only any one value. Are you getting the point? In the case of consideration in the form of shares, issue of shares, which value will consider? This value only. Whatever the amount you have paid will be considered. But sometimes you are having only this value means consider this one. Both the values means consider only the 20 lakhs. This is the main objective you need to remember. So this is called as initial recognition. So nowadays the students are not interested to learn the concept. You have to learn, then only you will get a clear exemption in the financial accounting. So most of the students are not paying the consideration, I think so. So nothing worry, no problem. I will discuss each and every point clearly. So we have completed the initial recognition formula. Yes or no ma? So initial recognition at the time of acquisition of a construction of PPE, in the case of consideration of cash, other than cash, and next one in the case of self construction we have to see. Sir, self construction means nothing but all the costs we have incurred for the construction will be considered and add back allocated cost directly related to the construction. For example, we are going to construct one particular building. Okay, now for the construction of that particular building, we have to incur cement, bricks, iron, etc. Okay, now total for the construction of raw material purpose, we have included 10 lakhs. We incurred how much? 10 lakhs. For that, labor also we have included here itself. So for that we have appointed one of the supervisor. That supervisor will work half day in our personal purpose, and half day only he is coming. He will come and he will verify the construction. So totally we are going to pay 20 lakhs rupees is a salary for that supervisor. So half of the salary only we need to consider here. So half of the salary means how much? 10 lakhs will be considered for the construction purpose. What is the total amount? 20 lakhs is the total amount of self construction. So if you are doing the self construction means what are the costs you need to consider? Cost incurred directly for that construction plus allocated cost directly related to that construction. If you combine both the things, so that amount is called as cost of the PPE. So this is called as initial recognition. We have completely discussed about this time. So next one, subsequent recognition. Next one is subsequent. When coming to the subsequent, we may follow the cost model or we may follow the revaluation model. I think you know the revaluation. What is the meaning of revaluation, Amma? So we are going to revalue up to the market price is called as. We are going to consider in the books. Normally we will consider book value. What is the meaning of book value? Cost minus depreciation. Some of the situations we will consider market value. So book value bringing up to the market value is called as revaluation. So first we are going to see the cost model. What is the meaning of cost model, Amma? Cost of PPE, which we have identified at the time of initial recognition. So either you may get in the form of cash, other than cash, or self construction, whatever it is. So the cost of that particular PPE less accumulated depreciation. What is the meaning of accumulated depreciation, sir? Depreciation for the first, for example, we have completed the construction up to here, up to now we have completed the construction 4 years completed. After construction of the particular property, how many years completed? 4 years. That 4 years depreciation combinedly we are going to call it as accumulated depreciation. What we have to do that depreciation? We have to do the depreciation minus or plus? Minus. Unless the impairment loss. Can anyone in the class, can you say what is the meaning of impairment loss? If you respond, I will continue the section. What is the meaning of impairment loss? Guys, what is the meaning of impairment loss? Sirisha, Prithvi, Upendra, peer learning. So respond amma. Sir, nothing but impairment loss means, don't worry amma. So for example, book value is equal to 10 lakhs amma. What is the book value? You know, cost of the PPE minus accumulated depreciation is called as what ma? Book value, or some of the people may call it as what ma? Carrying value also. Now the market value is equal to only 8 lakhs. Market value is equal to how much amma? Only 8 lakhs. The differences between these two, if we sell immediately this particular asset, we are going to get the loss. That loss is nothing but what ma? Impairment loss. Here, what is the amount of impairment loss ma? 10 lakh minus 8 lakh, that is equal to how much amma? 2 lakhs is called as impairment loss. That means carrying value will be more than the market value. At that point of time, whatever the impairment loss we are getting, that thing we need to reduce from the particular asset. So this is called as cost model of, okay, finally whatever the amount you have got, we need to recognize in the financial statements. This is called as subsequent recognition, initial recognition, subsequent. When coming to the revaluation model, what is the meaning of revaluation? We have to take the revalued asset. So after the revalued asset, after the revaluation, whatever the depreciation you have incurred, we have to reduce. And after the revaluation, if in case once again you are going to have the impairment loss, and what we need to do, we have to reduce, and then we are going to get the carrying value. That carrying value we need to record in the financial statement because it is a subsequent recognition. So till now, what we have discussed, sir, means simple amma. First, I have started the discussion with the meaning of property, plant, and equipment. Can you see, ma? So the meaning of property, plant, and equipment means nothing but, so it is a tangible fixed asset which can be used for the production and supply of services on goods, and next one, rental purpose or administration purpose. So it is expected to be used more than a period of 1 year. And next one, no need to sell as a normal course of business. The main purpose of this as a PPE is nothing but we have to use for the purpose of business. And next one, can you say the definition of the barrel plan? Sometimes they will ask the definition of the barrel plan for 3 marks. Okay, Namma. So what is the meaning of barrel plant, ma? Is everything fine, ma? Okay, guys. So here the slight difference between the biological asset and what, ma? Barrel plant. So what is the slight difference from the biological asset and barrel plant, ma? Sir, whatever, if you want the agriculture produce, so you are going to get that particular agricultural produce by way of cutting down the complete that remains. It is a biological asset. So we are going to get the agriculture produce. Example is a coconut tree. So how we are going to get the coconut tree, ma? So we are going to get the coconuts without cutting down the coconut tree. So that means coconut tree is called as what, ma? Barrel plant. Okay, na? When if you take the example of what, ma? Sugar cane. So we will get the sugar cane without cutting down the tree. No, we cannot get the sugar cane without cut off from the land. For that reason, sugar cane is called as what, ma? Only biological asset. When coming to the barrel plant, it is not a barrel plant, ma. So barrel plant means it will be stay forever. Okay, now for long they will give what, ma? They will give the agriculture produce. That one only the slight difference. So they have given the meaning. So used for the production and supply of agriculture produce for a period more than the 12 months in a remote likelihood sale like an agriculture produce expected a incidental scrap. So use it for more than a 1 year. So this is the example. I think you have got the clear picture. So this standard is not applicable to the biological asset and vesting assets, not applicable to the intangible assets also. There are separate standards allocated to that one. So next we have discussed about the recognition criteria. So when coming to the recognition, when we need to recognize this PPE in the books of accounts means, so it is possible that the future economic benefits related to the asset. So what is the meaning of future economic benefits are? Now, if you take an example of recording setup. So I am using the laptop for the recording. We are using the laptop only for the recording purpose. After recording these classes, we are going to sell in the market. By our selling into the market, what we are going to get, we are going to generate the revenue. That means what we are going to get, we are going to get the benefit or not. Yes, if in case you are going to get the benefit, then only you have to record in the books of accounts. And that cost of the asset must be measured reliably. How we can measure that particular cost of the asset, we have discussed. So we are having how many methods? In consideration in the form of cash and consideration in the form of other than cash, and all the discussion we have completely discussed about this one. So initial recognition means at the time of acquisition of an asset, subsequent means at the time of preparation of financial statements. So totally I have discussed these things, so no problem. Consideration in the form of exchange of asset also discussed, subsequent recognition also discussed. And next we have to discuss about the concept of depreciation. So I think, do you know the depreciation definition? What is the depreciation definition, Amma? So the depreciation amount of the asset shall be allocated over its useful life of assets in a systematic base. So nothing but I am going to call it as what? It is a capital expenditure. Even it is a capital expenditure, on the base of future economic life of the asset, we are going to reduce the cost and we are going to record in the P&L account debit side. So that allocation of the fixed asset, what is the meaning, Amma? Allocation. The word allocation is important. They may ask you as an MCQ. The allocation of fixed asset cost over its life of the asset is called as what, depreciation. The following factors are considered for the calculation of depreciation, which are cost of the asset, scrap value or residual value, and useful life of the asset. These things we need to know. Without these things, we cannot perform the depreciation. So what is the meaning of useful life, Useful life and residual value must be reviewed at least at the end of the financial year. So all the things are not important. So here, as per the standard, only straight line method, diminishing balance method, production unit method are there. There are so many methods of depreciation. I will discuss now the depreciation methods one by one. So till now, there is any doubts, you can ask me, Amma. So here the main important point is called as, if any changes in the method of depreciation, a re-estimated life of the asset, a re-estimation the scrap value, so leads to be a prospective effect from the date of change takes place. So previously there is a standard called as, there will be another standard called as AS6. So what is the meaning of AS6? AS6 is nothing but a separate standard delegated to the depreciation. In that, if there is any change in the method or if there is any change in the value, if there is any change in the life, so then they will use what, retrospective effect. So retrospective effect means from the scratch. So take an example of Rolex. So what is the meaning of Rolex, What is the favorite dialogue of the Rolex? Let us begin from the scratch. That means retrospective means what, from the beginning. Prospective means what, from the date of change. Take an example of Prabhas. In a Mitchum film, what is the dialogue of Interval Bank? He will say, now only started. Now only started means what, from the date of change we have to start. The main important point you have to remember what, prospective effect only we have to give that effect, but not the retrospective. You will get a clear picture in the further discussion of this class. So till now we have completed the total standard of AS10 which we have discussed, and now we have to see more focus on depreciation. With the inclusion of depreciation only they are asking in the examination. Now I will discuss each method. First I will discuss the methods of depreciation and then I will discuss the further questions given in the exam. You will clearly understand. When coming to the recognition point of view, you will get only recognition in the form of cash in the examination. You are not going to get recognition in the form of other than cash in the examination. We may get also, you can write. So which value we will consider? We will consider the asset given and share value. In the case of not having a commercial substance means we will consider the asset taken. That's all. Okay, now in the form of cash means there is a formula, we will add back all the things and we will reduce certain things, we'll get the cost of the asset. What is the meaning of subsequent recognition? We have to reduce the accumulated depreciation and we have to reduce the impairment loss. That's all. And there is another most important concept is called as what ma? Revaluation asset. All the points will be discussed one by one carefully. Till now you need to understand about the meaning of PPE. You need to understand about the bearer plan. Is fine, is sufficient, no problem. Even though you have not understand anything also. So now I'm going to start with the further discussion, Amma. What is the further discussion means? Depreciation. So what is the normal meaning of depreciation, ma? Reduction in value of asset is called as what, ma? Depreciation. So what are the causes of depreciation, sir? Cause means what, ma? Cause means why we are going to, why the asset will be depreciated. So reasons, we can call it as what, ma? Reasons. First one is called as wear and tear. What is the meaning of wear and tear, ma? So repeatedly we are using that particular product means the value will be decreases. For example, if you take example of white shirt, you have purchased one particular white shirt. If you repeatedly wearing that particular white shirt, the same white color will not be there, ma. The white color will be what, ma? Will be depreciated by way of using a number of washes like that. So if you repeatedly use anything, the value will be reduces. So next one is called as what, ma? Obsolescence. What is the meaning of obsolescence, sir? Obsolescence means based on technology. So nowadays 5G is coming to the picture. When the 5G comes, 4G value decreases. Okay, now when the 4G comes, 3G value decreases. So like that, obsolescence means what, ma? Technology you need to remember. Next one, passage of time and affection of time. Sir, passage of time means what, ma? If the time passes, the value decreases. So for example, in the olden days, the girls will wear what, ma? Langavani like that. Nowadays, the girls are wearing what, ma? Jeans and t-shirt. The value of langavani will be decreases or increases, ma? The value of langavani will be decreases. So like that, passage of time also asset value will be decreases. For example, if I purchase the one Royal Enfield bike 2 years back, okay, now 2 years back will be depreciation now, yes or no, ma? Immediately if you want to sell that particular bike means the value will be same or different. Different. Why, sir? Because I have used that particular asset repetitively and the value based on the passage of time also the value will be decreases. And there is another reason is called as what, ma? Accident. So if you see one accident is happened, the spare parts will be damaged. Okay, now because of the damage of the spare parts, the value will be increases or decreases, some decreases. So next we have to see the types of assets. What are the types of assets? Currently, while discussing in the initial stage only we have discussed current assets and non-current assets. When coming to the current assets, there is no depreciation, you know, as usual, because we are having a benefit of less than 1 year. Tangible means it is called as what, ma? Depreciation. On the intangible asset, we are going to have depletion or amortization. The value of decreasing the intangible asset is also called as what, ma? Depletion or amortization. They may ask you in the MCQ, please remember. Tangible asset decreases means it is called as a depreciation. Intangible asset decreases means it is called as a depletion or amortization. So please remember these points. So next, what are the objectives for the depreciation, sir? So ascertainments of true profit. If you want to know the true profit, we have to know the correct cost. Okay, now we have to know the true profit means we have to know the correct cost, ma. For example, we are producing 100 units. How many units we are going to produce, ma? 100 units. For the production of 100 units, we have incurred labor. So we have to pay the labor what, ma? Wages. And we have incurred the raw material. Wages cost is equal to 100 rupees per production of 1 unit. And raw material cost is equal to 100. Total how much, ma? 200. If you are going on the 200, you are going to charge the profit and we are going to sell in the market. Whether this calculation is correct or wrong, ma? Wrong. Why, sir? Because you have to charge the certain value of that machinery, whatever you have used for the production of what, ma? Unit, that machinery cost also we need to charge to the product. Okay, now. So if you are not charging the machinery value to the product means no correct cost will not be get. If there is no correct cost, there is no correct profit. So how you are going to charge that particular cost of that mission to the product means by way of depreciation. So we are charging for that reason depreciation to the which account, amma? P&L account. You are transferring to the P&L account means completely that cost will be added on that product. Okay na. So indirectly we'll consider as an expenditure and we are going to consider as what ma, while we are going to get ma profit, correct profit. So if you charge the depreciation, then only we are going to get the correct profit, then only correct cost will be there. And presentation of true financial statements also. Without this calculation of depreciation, there is no true financial statements. So we cannot replace the asset. Okay now. If you are, we have to put the savings. Without the savings, we cannot purchase the one fixed asset directly. Okay now. For example, in the olden days, if you want to purchase the cycle, means what we will maintain ma? We will maintain one kiddie bank like that. From that kiddie bank savings only, what we will do ma? We will take that amount by the savings. So like that, we need to save the machinery. We need to save the expenses through the help of what ma? Depreciation. Even though you are writing depreciation in the P&L account also, okay na, really the expenditure we have incurred, you are keeping set aside of profit amma. You are keeping set aside of profits for the purpose of using the depreciation amount only. We can replace the asset easily. So next one is called as what ma? Ascertainments of true cost of production. So if you get the correct cost, then only correct profit, then only cost of production will also be correct. So these are the points only for the general knowledge sake. So next one. Important topics of this chapter: journal entries and what ma? Ledgers, methods of depreciation, revaluation of asset, when there is a change in method of depreciation, life on how to do. Next one is called as what ma? Provision of depreciation, and next one is called as component method of depreciation. We are going to see all these topics now. Okay, now all these topics are so much important. They will give in the second question for how many marks ma? 7 marks. They will link with the they will give not only these things, indirectly linking what ma? AS 10. So first we are going to see the journal entries and ledgers, and next we are going to see the methods of depreciation. What is the journal entry for the purchase of asset ma? So asset account debited to cash if it is a cash purchase. If it is a credit purchase, means what is the entry? Asset account debited to creditor account. So next one, what is the depreciation entry amma? Depreciation account debited to asset, because the asset value decreases. Asset having which balance amma? Debit balance. If the debit balance decreases, what we need to do? Credit. So depreciation is a nothing but expenditure. Expenditure always increases. So depreciation account debited to asset account. The transfer of depreciation, where we need to transfer ma? At the end of the year, nominal accounts will be transferred to P&L account. So P&L account debited to depreciation account. Okay, now what are the entries ma? Once again, if it is a cash purchase of asset, asset account debited to cash. If it is a credit purchase of asset, asset account debited to creditor account. What is the entry for the depreciation amma? Depreciation account debited to asset account. What is the entry for transfer of depreciation to P&L account? P&L account debited to depreciation account. So next we are going to see the methods. What are the methods? I will discuss, sir. First, straight line method, you know already. We are going to call it as what ma? SLM method, fixed installment method, or original cost method. Sometimes they will use this method. So what is the meaning of original cost method, sir? Original cost method means nothing but straight line method only. Next, I will discuss the diminishing balance method, written down value method, or reducing balance method. Next, sum of years digits method, mission hour rate method, production units method, and depletion method. So all these methods we are going to see, and I will take one example for each method. Okay, Nama. So first I will discuss with the straight line. So we are going to see this one. So you know the straight line method. So straight line method means what ma? Fixed amount of depreciation will be there or less amount ma? Fixed amount of depreciation will be there for each and every year. So what is the formula for the depreciation ma? Original cost of the asset minus scrap value divided by estimated life of the asset. This formula we are going to use only when there is no rate of depreciation given in the question. If they are given the depreciation in the question, depreciation rate in the question, we have to take the particular rate. So rate of depreciation is equal to depreciation divided by original value of asset into 100. I think you know, all the persons will know these meanings, will know these formulas. What is the formula ma? Original cost of the asset minus scrap value divided by estimated life. If you apply that one, we are going to get what ma? Depreciation. So after getting the depreciation rate, easily we can get ma. So depreciation divided by original value of asset into 100, then what will get ma? Rate. So by way of understanding this one, we are going to solve one question. See ma carefully. I think it is visible, right? Okay guys. Jain Bros acquired a mission on 1st July 2021 at a cost of rupees how much amma? 14 lakhs, and he spent 1 lakh on its installation. Okay, ma. We are going to purchase the PPE in the form of consideration in the form of cash. That means what are the formula, ma? So original cost of the original value of asset plus what we need to incur, ma. We need to incur the direct expenses. We need to add back the direct expenses up to put to use the asset. So here, what is the direct expenditure we have incurred, ma? We incur the installation is a direct expenses. What we need to do? We need to add back the installation expenses. So 14 lakhs plus 1 lakh. What is the total value of asset now? 15 lakhs we need to record or 10 lakhs only, 14 lakhs only we need to record. Amma. We need to record the 15 lakhs. The total value of asset is equal to 15 lakhs. The form written off the depreciation at the rate of how much, Amma? 10%. So that means no need to follow this formula. So for that reason, straight away we need to charge the amount of 10% on the which value, Amma? Original cost of the asset every year. The books are closed on which date, Amma? 31st December every year. So 31st December means what is the starting date of the year, ma? So 1/1 is the starting date of year. What is the ending date of year? 31st 12. The purchase in which year, Amma? 2021. So 31st 1 2021 to 31st 12 2022. But in the first year they have purchased middle of the year. What is the date of purchase, ma? The date of purchase is on 1st July. July means 7 and 2021. That means in the first year, how many months depreciation only we are going to get? We are going to get only the 6 months depreciation for the first year. How many months, ma? 6 months. From next year onwards, how many months depreciation we are going to get, ma? We are going to get the 12 months. Can you say the first year depreciation, ma? How we are going to get the first year depreciation? 15 lakhs into 10% into 6 by 12. Yes or no, ma? What is the answer we are going to get? So 1,50,000 divided by 2. 1,50,000 divided by 2 means 75,000 is the depreciation for the first year. From second year onwards, what is the calculation, Amma? So 15 lakhs into straight away 10% into how many months divided by how many months, Amma? 12 months divided by 12 months. That is equal to how much we are going to get? 1,50,000 is the depreciation for the second year onwards. So this is the depreciation for which year, Amma? This is the first year and this is the second year onwards. From the second year onwards, same amount of depreciation or different amount of depreciation, Amma? Same amount of depreciation. So up to which year, Amma? So we have to show the machinery account and which account, Amma? Depreciation account. For how many years? We have to show the machinery account depreciation for 21, 22. So 2 years we have to show. At the end of the on 31st 12 2023 we have sold that particular asset for how much, Amma? 10 lakhs. Can you identify the profit or loss, ma? So how many years we have used it? 31st 12 means from the third year ending. So we have to charge once again what, ma? Depreciation. So this is the 2021 year. Yes or no, ma? 21, this is 22 year and this is 23 year. What is the total amount of depreciation now? 1,50,000 plus 1,50,000, 3 lakh, 3,75,000. So 3,75,000 is the total accumulated depreciation up to the date of sale. Yes or no? What is the total value of the asset, Amma? 15 lakhs is the total value of asset. So 15 lakhs value of asset minus accumulated depreciation of 3,75,000. What is the amount we are going to get, ma? So 11,25,000 is the value, I think. How much, Amma? 11,25,000. 11,25,000 value of asset, we are going to sell at which value, Amma? 10 lakhs. So that means we are going to get a loss or profit, Amma? Loss. Loss of rupees how much? 1,25,000 is the loss. I think, do you know how to prepare the asset account and how to prepare the depreciation account? So even though you know, I will prepare the fastly. So please participate with me. So I'm going to prepare the asset account first. Yes, ma. 1,25,000 is the loss. So because what is the book value as on that date? Book value is equal to 11,25,000. So which account I'm going to prepare, ma? Asset account. So can you see the entry for the purchase of asset, amma? Asset account debited to cash or bank. On which date we have purchased the asset? We purchased the asset on 1/7/2021. So on 1/7/2021, to cash account, that is equal to how much, ma? 15 lakhs. We have to add back the 14 lakh plus 1 lakh. That is equal to how much, ma? 15 lakhs. And depreciation we are going to charge at the end of the year. What is the end of the year, amma? 31st/12/2021. So what is the entry? Depreciation account debited to asset account. In the asset account, which side, amma? Depreciation account. On the credit side. How much? What is the value, amma? So 15 lakhs into 10% into 6/12, that is equal to 25,000. 75,000. Okay, next we have to close the asset. So what is the same date is the closing? So by balance carried on. How much, amma? 14,25,000 is the balance amount. So what is the total, ma? 15 lakhs. So that carried on, what we need to do, ma? We need to brought down. To balance brought down. What is the value, ma? 14,25,000. Yes or no, ma? Yes. Now, what we need to put here? What is the starting date, ma? 1/1/2022. So next, by depreciation again at the end of the year, 31st/12/2022. That is equal to amount is how much? On the original value of asset only we have to charge, ma. What is the original value of asset, ma? 15 lakh into 10%, that is equal to how much? 1,50,000. So reduce this amount, how much we are going to get, ma? By balance carried on. So 14,25,000, 1,50,000. So that is equal to 12,75,000 is the balancing figure. Yes, ma. Thank you. So what is the total, ma? 14,25,000 is the total. So why you are not going to discuss each and every one point means, so for the knowledge sake, you know, but I am discussing once again, that's all. So how much, amma? What is the carried on value, brought down value to balance brought down, that is equal to 12,75,000. So what is the date of starting, ma? 1/1/2023. 1/1/2023 is the starting date. And again we have to charge the depreciation at the end of the year. We have sold on which date, ma? 31st/12/2023 only. So by depreciation, how much, amma? Once again, 1,50,000. We are selling the asset for cash other than cash, amma? For cash. For cash, 1,50,000. What is the book value now? Book value is equal to 11,25,000. What is the sale value of asset entry? Sale value of asset is equal to cash or bank account debited to asset account. In the asset account, which side, amma? Credit side. By cash or bank account. What is the sale value, amma? 10 lakhs. Now if you do the balance, it should be balanced because only we are having how many assets? We are having the two assets. Okay, now we are having only one asset. That asset only we have sold. That means what is happening, amma, now? The account should be closed. Should be closed means what? Balance should be there or should not be there? Should not be there. So actual value is how much, amma? 12,75,000. Here also how much should be there? 12,75,000. But actually how much we are having? 11,50,000. How much we are having, amma? 11,50,000. So minus 11,50,000, that is equal to how much, amma? What is the loss we are going to get? 12,75,000 This balance is right, amma, 12 lakh 50. So the balance where we need to transfer, amma, we need to transfer to the P&L account. What is the loss balancing figure? 12 lakh 75 minus, can you say the sale value, amma? 10 lakhs na. Minus 10 lakhs and minus 1 lakh 50,000. So 1 lakh 25,000 is the answer. Okay, na? This thing we have to transfer to the P&L account debit side. So here, if you see, this one is a P&L account. So in the P&L account debit side, what we need to write, ma? To loss on sale of asset is equal to how much, ma? 1,25,000. I think, do you know how to prepare the depreciation account? You know or not, ma? Okay, now I will show for 1 year, no problem. Imagine this is a depreciation account. So what is the entry for the depreciation, amma? Depreciation account debited to asset account. What is the date of purchase? On 1/7/2022. So what is the entry, amma? Depreciation account debited to asset means which side we need to record, ma? So depreciation debit na. So to asset only. So to asset. What is the current year depreciation, amma? So current year depreciation is 15 lakh into 10% into 6/12. That is equal to how much, amma? 75,000. This 75,000 at the end of the year. What is the year end, amma? 31/12/2022. We have to transfer to which account, amma? P&L. What is the entry? P&L account debited to depreciation account. So how much? 75,000. So we have to close that particular asset. 75,000. Here also how much, amma? 75,000. So like that we have to pass the every year. So this is our complete discussion about the straight line method. 1,25,000 only the loss we have got and transferred to which account, amma? P&L account. So every year depreciation also we have to transfer to the P&L account. So thank you. 2023, yeah, first year. Okay, amma. So next we are going to see the sum of years digit method, ma. Sum of year digit method. I think you know how to calculate the diminishing balance also. So don't worry. So directly I'm going to see the new concept called as sum of years digits method. So they will ask sometimes different types of methods also in the examination. So very important. Okay, na? Is everything clear, ma? Screen visibility is fine, na? Sound increaser. Okay. Is everything fine now? Okay, na? Akash? Akash, okay na? Sound కూడా increase చేయమని. Hello, okay na now? Okay guys, I will speak somewhat louder, no problem. So the formula for sum of years digits method is, you have to remember this formula. So original cost of the asset, sorry guys, wait a second. Original cost of the asset minus residual value. What is the meaning of residual value, amma? Residual value means nothing but scrap value. So original value of asset minus scrap value into remaining life of the asset divided by sum of all the digits of the life of the year. So I think I am not getting, sir. So let us take an imagine 10 lakhs is the original value. How much? 10 lakh is the original value and minus residual value is equal to 2 lakhs is the scrap value. I think the estimated life is equal to 5 years. Estimated life is equal to how many years, amma? 5. We have to take the remaining life as how many years? 5 years. At the beginning of the date only we have purchased the asset. The sum of all the digits means how we have to do means 1 plus, what are the remaining life? 5 years na? 1 plus 2 plus 3 plus 4 plus 5. So that is equal to how much we are going to get? 3 plus 3, 6 plus 15. So divided by 15. If it is the remaining life is 4 means 4 divided by 15 only we have to do. 4 divided by 15. And remaining life is 3 means 3 divided by 15. Like that we have to do. If you see here, you will get a clear picture. So Mr. Akash and Co have purchased a machine. Costing is how much, Amma? 10 lakhs. The estimated useful life and scrap value. Life is equal to how many years, Amma? 10 years. So what is the scrap value? 1,20,000 respectively. The machine was put to use on 1/1/2017. So 1/1/2017 means they are following which year, ma? Show the machinery account and depreciation account in the books for how many years, ma? 2022. So only single year means they are following the calendar year. So if there is a double years means they are following the financial year. So following calendar year means starting of the year only. Can you say the current day depreciation, ma? Yes, we can say the current day depreciation. So what is the formula, ma? What is the original cost of the asset now? 10 lakhs is the original cost of the asset. So minus scrap value. Can you say the scrap value, ma? 1,20,000. So into what we can do? What is the remaining life of the asset? 10 years. Divided by sum of years of digits. Sum of years of digit means how we can do, ma? So 1 plus 2 plus 3 plus 4 plus 5 plus 6 plus 7 plus 8 plus 9 plus 10. So that is equal to, can you say the amount of depreciation we are getting in the current year? Guys, 1 plus 2 means how much, ma? 3 plus 3, 6 plus 10, 4, 10, 10 plus 5, 15. 15 plus 21, 28. 28 plus 8, 36. 36 plus 9, 45. 55, amma. How much we are going to get? 55, ah? So 55. So how we are going to get, ma? 10 lakhs minus 1,20,000. 8,80,000 into 10 divided by 55. So 1,60,000 is the amount of depreciation for the first year. Okay, na guys, 1,60,000. Thank you, ma. In the second year, when coming to the second year, how we can calculate, ma? So the remaining life is how many years? 9. So here 9 also divided by how much we have to do? 1 plus 2 plus 3 plus 4 plus 5 plus 6 plus 7 plus 8 plus 9 plus 10 we have to do. Even though it is a 9, 10 we have to do. Can you say the second year? So this is the thing for how many years, amma? First year. Can you say the second year depreciation, guys? Second year. What is the second year, ma? Sorry, if they have given to do WDV and sum of year this method, how to do? WDV sum of years means separately only how to do. Second year 1,44,000. Super, amma. So how we have to calculate the second year, ma? The same calculation only. So 10 lakhs minus 1,20,000 into 9, but divided by up to sum of 10 years only. So that means again 1 plus 2 plus 3 plus 4 plus 5 plus 6 plus 7 plus 8 plus 9 plus 10. Okay, now what is the calculation, ma? Now we are going to get 45 down. Yes or no? So 1 lakh 10 lakhs minus 1,20,000 into 9 divided by 45. How much, ma? Divided by 55 only. 8,80,000 into 9 divided by 55. 1,44,000. Yes, ma. The correct answer is 1,44,000. Okay, na. So like this we have to do. This is called as sum of years digits method. Okay, na. So now next I am going to see the mission hour rate years of digits method. All of you keep remember the formula, easily we can do. And next one is called as what, ma? Mission hour rate method. When coming to the mission hour rate method, depreciation is equal to original cost of the asset minus scrap value divided by life of asset in hours. Life of asset in hours. Then we get what, ma? Depreciation per hour. So we should multiply with the number of hours worked in a year. So what I am saying, ma, it is same like a single SLM method only. So original value of asset minus scrap value divided by life we will do. Here also life in hours we will consider. So we know as per the costing, divided by hours means we will get per hour, how much amount per hour. So here also depreciation per hour we will get. That depreciation per hour we have to multiply with the number of hours worked in a year. We will get a clarity by way of seeing this question. Okay guys, so see the question carefully. A machine was purchased for rupees how much, amma? 30 lakhs and having estimated life of working how much? 24,000 hours. Total working hours is equal to 24,000. The scrap value is estimated at how much, amma? 2 lakhs. So what is the formula, amma? The formula is nothing but estimated cost of the asset. The total cost is equal to how much, amma? Total cost is equal to 30 lakhs minus what is the scrap value, amma? 2 lakhs divided by what are the total hours worked? 24,000 hours. Can you say the depreciation per hour, amma? 30 lakhs minus 2 lakhs means how much, amma? 28 lakhs divided by 24,000, that is equal to 116.67 per hour. What is meaning of per hour, amma? Depreciation per hour. Now we have to multiply with number of hours. So Brahma, we have to multiply with number of hours means, so 1 to 2, 3 years. How many hours, amma? We are having 3,000 hours. That means 3,000 into 116.67. That is equal to how much, amma? Into 3,000. So that is equal to plus 1 if you multiply, add back, 3,50,000. So 3,50,000 for first year, 3,50,000 for second year, 3,50,000 for third year also. Are you getting the point? First year 3,50,000, second year 3,50,000, third year also 3,50,000. Yes, ma. So next 4 to 6, ma. 4 to 6 means how many units, ma? 2,600. 2,600 into 116.67, that is equal to, that is equal to how much, amma? 2,600 into 116.60. 303,342. Nothing but 3,03,342. Okay, now 4th year, 5th year, 6th year same. So like that we have to do 1800 into 116.67. That is equal to how much? 1800 into 116.67. For weight to wear, 7 to 10. $21,000. So Brahma. So 21,000. Sorry, 2,10,000. So like that we have to do. This is called as which method, amma? Mission hour method. Okay, now previously we have discussed what, sum of years of. Remember the formula, easily we can go through. Okay, now guys. Okay. So next we are going to see this production units method. Which method, amma? Production. So here also the same formula, amma. Depreciation is equal to original cost of the asset minus scrap value divided by what ma? Estimated number of units produced. Okay na? Then we will get what ma? Depreciation per unit. So we need to multiply with the number of units produced. Sir, here hours. Here hours means we have taken the consideration of hours. Here units means we are taking the consideration of what ma? Units. So divided by units means we will get what ma? Per unit value. Here also depreciation per unit we are going to get. So we are going to multiply with the number of units. Easy amma concept. So a machine is purchased for how much amma? 20 lakhs. The estimated life is how many years amma? 10 years. With the residual value of rupees how much? 2 lakhs. So what we need to do? 20 lakhs minus 2 lakhs divided by what are the production units amma? 1,50,000 is the production units. So we will get what ma? Depreciation per unit. That is equal to how much? 20 lakhs minus 2 lakhs divided by what are the production units amma? 1,50,000 units. What is the depreciation per unit? 12 rupees. So 12 rupees is the depreciation per unit. Then 1, 2, 3. How many units we have produced? 20,000. So 20,000 into 12, that is equal to 2,40,000. Super amma. Super participation. Chandrasekhar. Akash. Super amma. So 20,000 into 12, that is equal to how much amma? 2,40,000. Are you getting the point? Yes ma. 2,40,000. And 4 to 7, that is equal to how much amma? 15,000. 15,000 into 12. How much amma? 1,80,000. So 1,80,000 for 4th year, 5th year, 6th year and 7th year. Okay na. Next 8 to 10 is how much amma? 10,000 into 12. That is equal to 1,20,000. Are you getting the point ma? So this is how we are going to calculate in which units method, production units method. Before that we have discussed about hour method and then sum of units digit method. So next depletion method. Next one which one ma? Depletion method. How to calculate sir? Depreciation is equal to units of output into depreciation per ton. Depreciation is equal to unit of output, nothing but tons. So tons into depreciation per ton. Now what we need to do ma? Total cost of asset divided by estimated total output. Depreciation per ton. Total cost of the asset divided by estimated total output. So here Surya and Co have took a lease and quarry of 1/1/2019. How much amma? 1 crore. What is the lease ma? Lease term is equal to 1 crore. As per the technical estimate that total quantity of the mineral is deposited how much amma? 2 lakh tons. So 1 crore divided by 2 lakh tons, that is equal to how much? 1 crore divided by 2 lakh tons. ₹50 per ton. Yes or no ma? 50 into 2,000 tons, that is equal to 1 lakh. 50 into 10,000 tons. So like that we have to do. Okay na guys? So what is the calculation ma? So calculation is the simple. Total value of the mine is equal to how much we have taken a lease? 1 crore. So 1 crore divided by what is the quantity of output we are going to get ma? 2 lakh tons. That is equal to 50 per ton. That is equal to how much amma? 50 per ton. Yes ma. 50 into 2,000 tons. That is equal to 1 lakh. 50 into 10,000 tons. That is equal to 50 lakh. 50 into 15,000 tons. That is equal to how much amma? 7 lakh 50. If you add up all this, 7 lakh 50, 5 lakhs plus 10 lakhs, we are going to end up with 1 crore. Are you getting the point? So like that we have to multiply all these things. So they asked us to prepare only 2019 to 2001. So we have completed. Is there anything else? So this is how we have completed the discussion of what ma? So discussion of depletion method also. So next, component method. The most favorite important points are component method. In the previous examination, they have asked this one. Previous to previous examination, they have asked this one. So what is the meaning of component method, sir? Component method means we have to know life of each component. Next one, cost of each component. If you know the life of each component and cost of each component, we have to identify the depreciation for the each component as per the which standard, amma? As per AS 10 PPE. So what we have to do, if you know the each component life, and if you know the each component cost, and if you know the rate of each component, depreciation rate for the each component, what you can do, amma? You have to compute the depreciation as a component wise. You should not compute the depreciation for the whole. So there is only the meaning. So if you understand, see, ABC Limited purchases a motor vehicle costing how much, amma? 70 lakh. The total motor vehicle cost is equal to how much? 70 lakh. In 1st April 2024, the major component of the motor vehicle is containing what, ma? Main body. Costing is how much? 20 lakhs. The main body cost is equal to 20 lakhs. And seating arrangement, sorry guys. Seating arrangements and finishing costing. So seating arrangement is equal to 30,000 and finishing engineering costing is how much, amma? 20 lakhs. The expected useful life of these particular components, the main body is equal to 5 years, seating capacity is equal to 6 years, and engine capacity is equal to how many, amma? 10 years. Compute the depreciation for the year ended 31st March. So what you know, ma? You know the life of the each component and you know the cost of the each component. If you know the life of the each component and if you know the cost of the each component, you have to calculate the depreciation for each component separately. Can you say the first main component, ma? So major component is called as main body. For the main body, the depreciation is equal to how much, amma? We know what is the formula, amma? Cost of the asset minus scrap value divided by estimated life. So what is the cost of the main body? Cost of the main body is equal to the 20 lakhs. What is the estimated life of the main body? Estimated life of the main body is equal to 5 years. Can you say the amount, amma? 20 lakhs divided by 5. That is equal to how much? Guys, participate. 20 lakhs divided by 5, that is equal to 4 lakhs. Per annum 4 lakhs. Okay, now guys. And next one, which component we know? Motor vehicle, the main body comes. Seating arrangement. What was seating arrangement? We know the separate cost. How much? 30 lakhs. What is the life? 6 years. So 30 lakhs divided by 6 years. That is equal to 5 lakh. So next one. What is the next main component, ma? Furnishing costing. Furnishing. So furnishing or finishing, how much, amma? 30 lakhs. Sorry. 20 lakh. How many years, amma? 10 years. That is equal to how much, amma? 2 lakhs. Can you see the total depreciation? 4 plus 5, 9 plus 11 lakhs. This is the total depreciation. So like this, you need to compute when they have given the component wise cost and component wise useful life or component wise rate also, we have to do the component wise. So this is called as what, ma? Important point as component method of depreciation. So till now we have completed the total method theory discussion of the AS10. We have discussed about the meaning of depreciation and what are the reasons for the depreciation and what are the methods will be involved in the depreciation. Totally each and every method, nearly I have discussed 6 to 7 methods for the depreciation point of view. If you refer before going to the examination, it will be fine. So next we are going to see revaluation of asset. The most important point of revaluation of asset is upward revaluation or downward revaluation. So please participate, guys. So what is the meaning of upward revaluation, sir? Upward revaluation means we have to compare with the carrying value. I think, do you know the carrying value? So what is the meaning of carrying value, ma? Nothing but book value. How we are going to get the carrying value? Cost of the asset minus accumulated depreciation minus impairment loss is called as what, ma? Carrying value. So imagine the carrying value. See, we can call it as carrying value is equal to 10 lakhs, ma. So now market value, we can say the market value is equal to 12 lakhs. Now we are bringing the carrying value to the market value. This is called as revaluation. First of all, what is the meaning of revaluation? Bringing the carrying value to the market value is called as revaluation. Sir, here we are doing what, ma? Book value is only 10 lakhs, but we are bringing up to the 12 lakhs. It is called as upward revaluation or downward revaluation? It is called as upward revaluation. It is called as what, ma? Upward. Take the reverse scenario. Carrying value is equal to 10 lakhs, amma. The same carrying value is equal to how much? If you take the market value is equal to only 8 lakhs. Now bringing the carrying value to the market value, this is called as upward revaluation or downward revaluation, amma. Downward revaluation. So upward means carrying value will be less and market value will be more. Downward means what, ma? Carrying value will be more and market value will be less. So if it is a downward means we are reducing the cost, means we are getting a loss. We are getting a what, ma? Loss. So in the case of upward revaluation, which value will be more, ma? Market value will be more, book value will be less. So value of asset will be increases or decreases, amma? Value of asset will be increases. So PPE account debited to that thing we have to transfer to the really we have realized normally we are going to improve our value. Normally we are going to improve our value. We have not realized. If we realize what we need to write, ma? To cash or bank, but we have not realized, na? So we have to maintain that amount is a reserve. Which reserve, ma? Revaluation reserve. So if it is a downward means we can utilize this reserve. Next time downward means we can utilize this reserve. So downward means what is the entry, amma? So PPE value increases or decreases? Decreases. So downward means we are getting a loss or we are getting a gain, amma? Loss. Loss will be transferred to which account, amma? P&L account. So what are the entries, amma? If it is upward means PPE account debited to revaluation account. If it is a downward means P&L account debited to PPE account. I think you get the clear picture about the upward and downward. So please give me a time. I will discuss. Okay, amma. So I think, do you know the meaning of upward revaluation and the meaning of downward revaluation? Upward means PPE account debited to revaluation account. Downward means we can use the revaluation surplus account also, no problem. So some of the people may use the revaluation surplus, some of the people may use the revaluation reserve account. Whatever you can use, we can use. Sir, here the problem is, the main important point is, so downward upward is easy, amma. All the persons will do all the things. So here the main important point is what, ma? First upward and then downward. And second one is called as what, ma? First downward and then upward. How the accounting treatment of all the things. Okay, I will take an example for each and every point. See this one, ma. Example number 1. First upward. Simultaneously it is next time while doing the revaluation we have downward. The cost of the asset is equal to how much, amma? 10 lakhs. And the life of the asset is equal to 5 years. Depreciation under SLM. They have not given the rate of depreciation. We have to use the formula. What is the formula, amma? Cost of the asset minus scrap value divided by estimated life of the asset. So what is the cost of the asset? 10 lakhs minus 0 divided by estimated life is equal to 5 years. Can you say whatever the amount we are getting, ma? 2 lakhs is the depreciation for the every year. So after 3 years, the machinery revalued to how much, amma? 5 lakhs. And again the machinery was revalued at the end of the 4th year. We're having the different cases. Case 1 revalued up to the 2 lakhs. Case 2 revalued up to the 1,50,000. Case 3 revalued up to the 1,25,000. So how to do all the things? I will explain clearly. So first we can see, first time upward after how many years, Amma? 3 years is a first time revaluation up to the how much, Amma? 5 lakhs. Whether it is upward or downward we can see. And then we can see what, ma, second time is a downward upward, how we can see in the next time we can see, no problem. So this is also called as what, ma, change in value of asset. If there is any change in the value of asset, we have to apply that same value for the depreciation for the remaining life. Prospective effect or retrospective effect, amma. We have discussed it previously. If there is any change in value of asset, life of the asset or scrap value of the asset, we have to take what, ma, prospective or retrospective. We have to use the prospective from the date of change. So first calculation of, what is the step number 1, ma? Calculation of book value of asset after 3 years, because after 3 years the asset was revalued. So first, what we have to take, ma? Book value means first we have to write the original value of asset. What is the original purchase value of asset, amma? 10 lakhs. And how many years of accumulated depreciation we need to reduce, ma? 3 years. So minus accumulated depreciation. How we can calculate, ma? 10 lakhs minus 0 divided by what is the life of the asset, amma? 5 years. If I do like this, per annum we are going to get. But how many years of depreciation we need to reduce, ma? 3 years. So how much we are going to get? So 10 divided by 5 means 6 lakhs. Yes or no, ma? So 6 lakh is the accumulated depreciation. What is the book value of the asset? 4 lakhs is the book value of the asset. 4 lakhs is the book value of a asset. Now this book value of asset on the day of first time revaluation, what is the value of revalued amount, amma? 5 lakh. So 4 lakh to 5 lakh. 4 lakh to, they are going to revalue to how much? 5 lakh. So this is called as upward or downward, amma? Upward revaluation. This is called as what, ma? Upward. So in the case of upward revaluation, can you say the entry, amma? Nothing but PPE value will be increases. PPE account debited to revaluation reserve account. Or some of the people may call it as what, ma? May call it as what, ma? What they are asking, revaluation surplus account also you can use. So what is the amount we need to transfer? So how much amount is increases, that much amount only we need to transfer. We should not write here 5 lakhs. How much we have increased? 1 lakh. So here 1 lakh and 1 lakh only we have to write. We should not write the 5 lakh, because whatever the amount increases, that much amount only we need to write. So what is the entry, amma? PPE account debited to revaluation reserve account. So from now onwards, on which value we have to calculate the depreciation, ma? On the 5 lakhs we have to calculate the depreciation. How many years completed? 3 years completed. How many years are still left, ma? The total life of the asset is equal to 5 years, but 3 years have completed. What are the, how many years are still left? Only 2 years are still left. For that reason, so what are the remaining life of the asset, ma? 2 years is the remaining life of asset. For the 2 years remaining life of the asset, we have to take the value of asset. How much, amma? 5 lakhs. We should not take the 4 lakhs. We should take the 5 lakhs. So I will calculate the depreciation for the 4th year. Prospective or retrospective, amma? Even though there is any change in the life of the asset, value of the asset, so we have to apply the prospective basis. We should not apply the retrospective basis. How, sir? So simple, amma. So second point is calculation of depreciation for fourth year. So how we can calculate ma? The revalued amount we have to take. So what is the revalued amount? 5 lakh. What is the scrap value amma? 0. If there is any scrap value, we should consider once again. Okay na? There is no scrap value 0. Divided by remaining life only we need to consider 2 years. So how much we are going to get ma? So 2,50,000 is the depreciation for which year ma? Fourth year. Can you say the value of book value at the end of the fourth year? So 5 lakhs minus 2,50,000, that is equal to the 2,50,000 is the value, book value of asset after the end of the fourth year. But again, after the end of the fourth year, they have revalued na? Yes or no ma? Again at the end of the fourth year, they are going to revalued. They revalued at a case one of 2 lakhs. 2 lakhs 50,000 value of asset, they are going to revalued up to the 2 lakhs. That means we are getting a loss of 50,000. How to make the accounting treatment, how to pass the journal entry, we have to discuss. So, and next we are going to see what ma? Book value at the end of fourth year is equal to how much amma? So 5 lakhs minus 2,50,000. Guys, did you get the point amma? So why we are reducing the 2,50,000? Because there is a change. Again, we need to calculate. There is no change means the same amount of depreciation we can continue. So that is equal to how much amma? Book value of asset is equal to 2,50,000. So first case, the case one, they are going to revalued. Yes or no ma? So they are going to revalued at the market value is equal to 2 lakhs. What is the second case ma? Market value is equal to, in the second case, the market value is equal to how much ma? 1,50,000 and 1,25,000. So 1,50,000 in the second case. And the market value is equal to 1,25,000. First identify whether. Sorry. Sorry guys, there is a connection issue. Now is everything fine? Okay guys, we are in the discussion of middle. First we have upwarded and then we are downwarded. Nagasai. Okay namma now, Nagasai. So there is a Wi-Fi technical issue going on there. I think now fine. Okay amma. So initially what they have done, there is upward of 1 lakh rupees, and thereafter next there is a downward of what ma case 1 50,000. This 50,000 we are going to, okay, this 50,000 we are going to utilize from the revaluation reserve, and this 1 lakh we are going to utilize from the revaluation reserve. When coming to the third case, how much amma? 1,25,000 is the downward. From this 1,25,000, we are having the reserve of how much? Only 1 lakh. This 1 lakh we are going to utilize from the revaluation reserve. We are going to set off. And this remaining 25,000 we are going to transfer to the P&L account. Okay, na guys? So let us, now we have to write the entries for these things. So I will write the entries. Can you say the first case entry, amma? Total amount of 50,000 we are going to set off with the revaluation reserve account. So what is the first time upward entry we have recorded? So upward entry we have recorded the PPE account debited to revaluation reserve account. So now we are going to reverse this. Why, sir? We reducing the asset means what? Downward means the PPE value will be reduces. So we have to record on the credit side. And we want to reduce the reserve account means reserve having which balance, amma? Reserve having the credit balance. In order to reduce the reserve, which side we need to transfer, ma? We need to transfer to the debit side. So what is the entry we need to record, ma? We need to record the revaluation reserve account debited to PPE account. So case 1, how much amount we need to reduce? We need to reduce the 50,000 only in the case 1. So case 1 entry is equal to revaluation reserve account debited to PPE account. How much amount we need to reduce in the case 1? 50,000. When coming to the case 2, how much amount we need to reduce, ma? Total 1 lakh we need to reduce from the case 2. So revaluation reserve account debited to PPE account, total 1 lakh. Sir, case 1, case 2 are dependent or independent, amma? Independent. Okay, na case 1 is not linked to case 2. When coming to the case 3, sir, we are having only the 1 lakh in the reserve. So only up to 1 lakh only we can utilize from the reserve. Remaining 25,000 we need to transfer to P&L account. So can I write like this? Revaluation reserve account debited to PPE account. In the revaluation, we are only having the 1 lakh. But how much amount we need to reduce ma PPE? 1,50,000 we need to reduce. Why, sir? The value reduced up to 1,50,000. So the remaining 50,000 where we need to transfer, ma? We need to transfer to the P&L account. This is a loss. So these are the 3 situations we have discussed completely. First one is the upward and second one is the downward. Subsequent downward we can call it as. Okay na guys, is everything fine? Audio, video, fine. So next we are going to see the next concept is called as first downward and then what ma upward. So see the same example. So here the cost of the asset is equal to the 20 lakhs and life is equal to how much? 10 years. Cost of the asset is equal to 20 lakhs and life is equal to 10 years. And depreciation under which basis amma? SLM basis. So after 4 years the mission revalued at how much amma? 11 lakhs. After the 4 years 11 lakhs. And again they have mission revalued at the end of the 5th year is equal to 10 lakhs, 10 lakh 16,000 and 10 lakh 25. First what we need to find out ma? We need to find out the book value of asset at the end of 4th year. Calculation of book value of asset at the end of 4th year. How we can calculate ma? First we have to take the original value of asset. So original value of asset is equal to, what is the original value of asset ma? Purchase inna 20 lakhs. So we have to make the depreciation. Which depreciation amma? Accumulated depreciation. For how many years ma? 4 years. So how we can calculate ma? 20 lakhs is the value of asset minus scrap value 0 divided by how many years ma? Estimated life is equal to 10 years, but we are requiring 4 years of depreciation into 4 years. That is equal to how much ma? 2 lakhs into 4, that is equal to the 8 lakhs. Can you say the book value of asset ma? Nothing but carrying value of asset. So carrying of value of asset is equal to the 12 lakhs. This particular asset they are going to revalued up to what ma? Revalued up to the 11 lakhs. So that means downward revaluation or upward revaluation amma? Downward revaluation for how much amma? 1 lakh. Can you see the entry? So downward means PPE value will be increases or decreases? Decreases. So what is the entry we need to write ma? PPE account debited to, sorry guys, downward means debit or credit amma? Credit. So P&L account debited to PPE account. How much value was reduced? The value reduced to 1 lakh and 1 lakh. So this is called as downward revaluation. This is called as what ma? Downward revaluation. We have to transfer to the P&L account. And subsequently, at the end of which year ma? Again at the end of the 5th year, they have made a revaluation. So can you say the amount of depreciation for the 5th year? What is the remaining life of the asset amma? Total 10 years, 4 years completed. Remaining life is equal to the 6 years. So we have to take the updated value. Which value we have to take now? 12 lakhs we need to consider a 11 lakhs amma. So we need to consider the 11 lakhs for the calculation of depreciation for the 4th year onwards. So first of all, we need to calculate the amount of depreciation for 5th year. Because totally we have completed how many years amma? 4 years. So we need to calculate the amount of depreciation for which year amma? 5th year. Okay na guys? No problem. Fine. So what is the formula amma? Original value of asset minus scrap value. Here original value of asset we need to consider how much? We should not consider the 20 lakh. We need to consider the 11 lakhs. So 11 lakhs minus scrap value is equal 0. How many years are left out? So 6 years are left out. 4 years completed. So that is equal to how much amma? 11 lakhs divided by 6. That is equal to how much amma? Guys, 11 lakhs divided by 6. That is equal to how much? So 1,83,333 is the depreciation for which year amma? 5th year. So now we can get to know the book value at the end of 5th year is equal to how much amma? 11 lakhs minus 1,83,333. So 11 lakhs minus 1,83,333. That is equal to how much amma? 9,16,667 is the book value of asset. Now this value they are going to revalue it how many ways ma? 3 situations are there. So what is the first one ma? So case 1, case 2 and case 3. How many situations are there ma? 3 situations. So here case 1, can you say the value of revalued amount? 10 lakhs, 10 lakhs 16,000. 10,16,667. What is the third case amma? The third case is 10,25,000. So upward revaluation or downward amma? Upward revaluation. Why sir? Here the book value is only how much? 9,16,667. But they are going to revalued up to how much amma? More than 10 lakhs here. In the second case 10,16,667. In the third case 10,25,000. Can you say the upward revaluation amount here? So minus 10 lakhs. So that is equal to 83,333 is the upward revaluation. Here 1 lakh is the amount of upward revaluation. Yes or no ma? 10,16,667 minus 9,16,667, that is equal to how much ma? What is the upward revaluation? Here how much is the upward revaluation? 10,25,000 minus 9,16,667. That is equal to how much ma? 1,08,333 is the upward revaluation. Now previously downward revaluation, upward revaluation amma. Now first time revaluation is we have got the downward revaluation. This is the subsequent revaluation. How much we are going to get? We are going to get the upward revaluation. This 83,333 we can set off or we can adjust. We can adjust with the P&L account. Because previously downward na, that loss we are going to cover it off. That loss we are going to cover. And this total 1 lakh we can cover or we cannot cover ma? Yes, we can cover. We can adjust with. We can adjust with previously P&L account. From this 1,08,333 rupees, 1 lakh we can adjust ma, because these 3 are independent cases ma. Once again I am repeating. From these 3 cases, 1 lakh is the one case and 8,000, this 1 lakh we can adjust with profit and loss account, and remaining 8,333 how we can do ma? So we can transfer to, sir, now which account we need to transfer ma? Upward revaluation or downward revaluation ma? We can transfer to the revaluation reserve account. Revaluation reserve. I think do you get the point? Now we have to we have to pass the entries for each and every case. So this is the total Information about what ma? First time downward and subsequent upward. Can you say the entries? So case 1. Case 1. Totally we need to adjust with the P&L account. Yes or no ma? What is the case 1 amount ma? 83,330 rupees. Totally we need to adjust with the P&L account. Previously which entry we have passed ma? We have passed the P&L account debited to PPE account. Now we need to reverse this entry. What is the entry amma? PPE account debited to P&L account. How much amount we need to transfer in the first case? 83,333. So that is equal to PPE account debit to P&L account 83,333. Okay, now totally we are going to reduce the loss and we are increasing our PPE account. Are you getting the point? So now, can you say the case 2 amma? Case 2, how much amount we need to adjust ma? We need to adjust the total 1 lakh. The same entry or different entry amma? Same entry. What is the entry amma guys? PPE account debited to profit and loss account. How much amma total? 1 lakh. Okay na. So next case 3, you have to say the total case 3, what is the total improvement? 1,08,333 is the total increased value. In that 1,08,330, 1 lakh we are going to adjust with the P&L account and 8,333 rupees we are going to transfer to the revaluation reserve account. Total how much amount of PP we need to increase? 1,08,333. So that means, can you say the entry amma? PPE account debit. How much amma? 1,08,333 rupees. So we need to set off the loss to P&L account. How much amma? How much loss we can set off? Maximum 1 lakh, because previously we got the loss of rupees only 1 lakh. And next, how much amount we need to transfer to the revaluation reserve ma? We need to transfer to the revaluation reserve account is equal to the 8,000. We need to solve. So please see this question ma. So machineries which appeared in the books of D Limited, how much ma? 86 lakh, has been revalued at how much ma? 90 lakhs. So 86 value of asset. So this is called as book value ma. Book means nothing but after depreciation or before depreciation. After depreciation only they are going to consider as how much amma? 86,000. The accumulated depreciation associated with how much? 28 lakhs. The accountant suggested that the revaluation should be accounted for by adjusting the accumulated depreciation account. You are required to discuss the treatment as correct or not. Sir, here they are mentioning that which thing ma? They are mentioning that appeared in the books of D Limited. Appear in the books of D Limited means what they are doing ma? Already 86, from that 86 lakh already depreciated of 20 lakhs is adjusted or not ma? Already adjusted. So that means directly we have to compare this 80 lakhs with which amount of 90 lakhs. Directly we have to compare. That means nothing but what ma? Upward revaluation or downward revaluation? Here the upward revaluation amounts to how much? 4 lakhs. Okay na guys. So here we should not reduce this 28 lakhs again from the cost of the asset. Why sir? Because 86 lakhs is the book value of asset, because already adjusted. So you have to imagine like that. Okay na? So we can write the analysis here. From above question, book value of rupees, how much lakhs is 86 lakhs is already after adjusting depreciation of rupees, how much Amma? What is the depreciation amount? 28 lakhs. So this is the first point. So no need to adjust no need to reduce depreciation. So we can compare directly with the rupees, how much Amma? 86 lakhs with market value of rupees, how much Amma? 90 lakhs. 90 lakhs. So that means it is a upward value of mission of rupees 4 lakhs. How did we get ma? 90 lakhs minus 86 lakhs. So the final conclusion is it is upward. Can you say the entry? Simple na? Missionary account debited to revaluation reserve account. How much Amma? 4 lakhs and 4 lakhs. So this is the conclusion you have to write. So I think, do you get the clear picture? An important question they may ask in the examination. Most of the students, they will think that what ma, we have to adjust these 20 lakhs. Afterwards, we have to compare with the 90 lakhs. We should not do like that. That is an important question. So next one, change in the method of depreciation. So up to now, we have discussed about the change in the value of depreciation. If there is any change in the value of depreciation, how we have to calculate the depreciation, we have seen. Now, if there is any change in the method of depreciation or change in the value of depreciation also, we have to follow from the prospective data, retrospective data. Prospective, that means from the date of change. So here simple, there is one question in the board book. We are going to solve this question. So Ram Limited, who depreciates its mission at the rate of how much Amma? 10% per annum on diminishing balance method. On which method Amma? Diminishing balance method. Had on 1st January 2022 the rupees 9,20,000 on the debit side. So that means the opening balance on 1st January 2022 how much Amma? 9,72,000 of missionary account. During the year 22-23, a mission purchased on 1st January 2020. So there were a mission which was purchased on 1st January 2020 of rupees 80,000 was sold of rupees 80,000 which was sold for how much Amma? 45,000. At the time of purchase of machinery on the 1st January 2020, what is the value of that asset ma? That asset value is equal to the 80,000. That particular asset we have sold for how much? 45,000. On July 2023, on July 2023, they have sold. And a new machinery at a cost of rupees how much? 1,50,000 were purchased and installed on the same date. The installation charges being how much Amma? 8,000 rupees. So what is the total value of asset? 1,50,000 plus 8,000, that is equal to 1,58,000. The company wanted to change the method of depreciation from diminishing balance method to the straight line with effect from 1st January 2023. So up to there is the question. So from there onward there is no question ma. So nothing worry. So they want to change the method from which date ma? 1st January 2023. So they have given the opening balance from 1st January 2022 and they have sold the asset on which date ma? On 1st July 2023. That means in the current year nothing they have sold. So we can discuss, no problem sir. I'm directly preparing what ma? I'm directly preparing the machinery account. So please prepare with me. You will get a clarity. The most important question, this one also. So which account amma? Mission account. Missionary account. DR and CR. Date particulars amount rupees. Date particulars amount rupees. So definitely in the chapter of depreciation and a chapter of bills of exchange and in a chapter of consignment and in a chapter of hire purchase in the chapter of leasing, what we need to do ma? We need to draw the date column. So please remember. Okay, now what is the starting opening balance they have given ma? They have given the starting opening balance on 1st January 2023. How much? 9,72,000. Can you say it is a debit balance or credit balance ma? Debit balance. On 1st January 2022. So can I write like this simple? 2022. To balance brought down. How much sum? 9,72,000. 22,000 into what is the rate ma? 10 percentage. So into 10 percentage, that is equal to how much sum? 97,200. Okay na guys, 97,200. So can you say the closing balance ma? So by balance carried on. So 9,72,000 minus 97,200. 8,74,800 is the balancing figure. So what is the total ma? 9,72,000 and 9,72,000. So what is the opening balance ma? Once again, to balance brought down, that is equal to how much ma? 8,74,200. So what is the opening date ma? 1/1/2023. Next year we have entered. When coming to the next year, there is a point that what ma? We have sold that particular asset on which date ma? 1st July 2023. 1st July 2023. If we sell the asset, what is the entry we need to record ma? Cash or bank account debited to machinery account. So in the machinery account, so up to 1st July, we have to calculate the depreciation on that asset. Okay, na? Which was purchased on which year, amma? 2020. So till now, on 1st July, na? 1st July 2023, by cash or bank. What is the value of asset they have sold, ma? They have sold at the value of 45,000. 45,000 is the sale value. We have to calculate the profit or loss on sale of that particular asset. So simple amma. So working note number 1. Calculation of profit on loss on sale of asset. First we have to start with which value ma? Original value of asset. Can you say the original value of asset ma? Original value of asset on 1/1/2020 given na? Yes, that is equal to how much ma? That is equal to 80,000 rupees. Okay na? They're going to sell at which year amma? 2023 middle. Okay na? 80,000 rupees. Yes or no ma? 80,000. 80,000. So next we need to reduce accumulated depreciation, or we can do straight away. This is not possible. This is not an SLM. So less depreciation for 2020. That is equal to how much amma? 80,000 into 10%. So that is equal to 8,000. If you reduce, how much we are going to get ma? 72,000 is the balance opening for the 2021. So again, minus depreciation for 2021. So 72,000 into 10%. That is equal to 7,200. How much we are going to get ma? So 72,000 minus 7,200. 64,800. And again we have to reduce the depreciation. For which year amma? 2022. So how much? 64,800 into 20%. Into 20%, sorry. How much amma? 6,480. How much we are going to get? Minus 10%. 58,320. This is the value at the beginning of the year. This is the amount of 2023 opening. Yes or no ma? Now we need to calculate the depreciation for half year only ma. So we are entering into the 2020 completed. This is the 21. This is the 22 opening. This is the 23 open. We have entered into the current year. So in the current year depreciation, how much we have to calculate ma? For 2023 up to what ma? Up to the date of sale. 58,320 into 10% into 6 by 12. Can you say the amount? 58,320 into 10% into, so divided by 2, we can do straight away. So 2,916. If you reduce, what is the amount ma we are getting? 2,916. And what is the amount we are getting ma? Minus 58,320. 55,404. Yes ma? 55,404. This is the cost of the asset which was available as on the date of purchase. Value on and and minus. Can you say the sale value ma? Sale value is equal to just 40,000. 40,000 only 45,000. Oh sorry, yes. So 45,000. So this is the sale value. How much we are going to get ma? We are going to get the 10,404. So what is the meaning of this 10,404 ma? Loss. Where we need to transfer this one? We need to transfer to the P&L account. Okay na? So this thing we are going to transfer to the P&L account. So but we have to recognize the depreciation of rupees how much? 2,916 we have to record on depreciation and the asset account by depreciation. On 1/7/2023 by depreciation amount how much amma? 2,916. 2,916. So on the year end, what is the year end ma? 31st 12/2023 by P&L account of loss. How much we have got, ma? 10,404. 10,404. On the same year, we have purchased one asset, na? So what is the same year we have purchased that particular asset, ma? A new mission which was purchased for rupees how much? 1,50,000 was purchased and installed on the same date. Same date means what, ma? 100. Can you say the purchase entry, amma? Missionary account debited to cash or bank account. So what is the date, ma? 1/7/2023 to cash or bank account. How much? 1,50,000. 1,50,000 plus, sorry guys, here 1,50,000 plus installation. How much, amma? 8,000. What is the total amount we have to record? 1,58,000. Okay, Nama. Now on this 1,58,000, how much amount we need? How many months depreciation only we need to charge? We need to charge the 6 months depreciation. So can I write here by depreciation? Yes. So by depreciation is equal to 1,58,000 into 10% into 6/12 plus this is only the important point, plus sir, here in this 8,74,200, the value which was sold now, what is the value which was presented on 2023 opening? 2023 is opening is equal to how much, amma? 58,320. On this amount we have already charged the depreciation. Now we have to reduce this 58,320 from the opening balance on 2023. So reduce that one, ma. 8,74,200 minus how much? What is the opening balance, amma? 58,320 into how much, amma? Into 10%. So this is the thing we have to done. So what is the total depreciation, amma? 1,200 minus 58,320 into 10%, M plus MRC. So 89,488 is the depreciation. So can you say the closing balance, amma? So 1,58,000 and 1,58,000. Sorry guys. Sorry guys. 1,58,000 plus 8,74,200. 10,32,200. What is the total, ma? We can write here total. No problem, guys. Can I write here, ma? 10,32,200. 10,32,200. Can you say the balancing figure, ma? On 31st 12/2023 by balance carried on. How much, amma? 10,32,200 minus 2,916 minus 45,000 minus 10,404 minus 89,488. That is equal to how much, amma? 8,84,392. 8,84,392. I think, did you get the picture? Okay, na guys. So this will be the opening balance. To balance broad. So we can make it as this one 2024, ma, no problem. This one is the 2024. So from this 2020, so 8,84,392 divided by 5, that is equal to So working note number 2, calculation of amount of depreciation for which year onwards, Amma? From 2024. So first of all, we have to take what, ma? Opening balance as on 2024 is equal to how much, Amma? Is equal to 8,84,392. From here onwards, we are taking there is nothing is question given, ma. So we are taking the remaining estimated life. Is equal to 5 years for all the units. Then that is equal to depreciation is equal to how much, Amma? 8,84,392 divided by 5. That is equal to how much? What I am saying is here method change means divided by 5. So that is equal to 1,76878. So that is equal to 1,76,878. From here onwards up to 5 years, what is the amount of depreciation we have to take? 1,76878.4. Super. So this is the overall clarity about the change in method of depreciation. Okay, na? So next one we are going to discuss about the provision for depreciation. So the most important concept, provision for depreciation. So here normally what we need to do, sir, normally we are going to transfer the depreciation to the asset account. What is the entry we will record normally? Depreciation account debited to asset account. But when coming to the provision, normally if the interviews also, if they ask the depreciation entry means, we should not say the depreciation account debited to asset account. We have to say the which account, which entry? Depreciation account debited to provision for depreciation account. This is the professional way. So we have to transfer to the provision for depreciation. Available in the provision for depreciation is called as type of depreciation, accumulated depreciation. Okay, now guys. So entry normally, if you purchase the asset, what is the entry, amma? Asset account debited to cash or bank account. If it is a credit means asset account debited to creditor account. So next, depreciation. In the case of provision, what is the entry, amma? Depreciation account debited to asset we should not recognize. We have to transfer to the provision for depreciation account. The provisions are having which balance, amma? Normally credit balance. If you want to increase the provisions, which side we need to record? Credit side. Now, next, the depreciation we have to transfer to which account? We have to transfer to the P&L account debit side. So, P&L account debited to the depreciation account. The provision balance will be transferred to which, where, ma? Balance sheet liability side. And asset balance will be transferred to which side, ma? Balance sheet asset side. So, here, they will mention in the question. So, asset is maintaining at a cost means they are following which approach, ma? Provision method. Okay, now sometimes they will give directly the provision account prepare, ma. Sometimes it is maintaining at a cost. That means what, ma? We are following the provision method. What is the entry for the provision for depreciation? Depreciation account debited to provision for depreciation account. So in order to see this question, you will get a clarity about the provision for depreciation. So this is the most important question they may ask in the upcoming examinations. So please listen. So within half an hour we can close the section. Okay, now guys. So I will sum up at last what we have discussed till now also. Okay, now. So we are going to complete this one on one more question and last the difference. Okay, now. So what they are saying, amma, SN Co purchased a mission for rupees how much? 1 lakh on 1/1/2019. The another mission was costing 1,50,000 was purchased on 1/7/2020. That means current year, next year, amma, next year. On 31st/12/2021, the mission purchased on 1/1/2019 means first mission sold for 50,000. The company provides you the depreciation 15% on straight line method. The company closes its books of accounts on 31st December every year. That means following calendar year, financial year, following the calendar year. So we have to prepare the machinery account, machinery disposal account, and provision for depreciation account. What is meaning of machinery disposal account? You will get a clear picture about it. So first, we have to draw the machinery account. Date particulars, amount rupees. Sir, next which account we need to draw? Provision for depreciation account. Last but not the least, we have to draw the mission disposal account. See, a small account is sufficient, ma. These are the accounts. You have to prepare machinery account, provision for depreciation account, and disposal account. So what is the first entry, amma? So there is a mission, purchase of mission on which date, ma? 1/1/2019. Can you see the entry? So mission account debited to cash or bank account. So 1/1/2019 to cash or bank. Can you see the amount, ma? Amount is equal to the 1 lakh. Sir, here they are following the provision for depreciation because they asked us to prepare the provision, means we have to follow the provision for depreciation method. So what is the amount of depreciation percentage rate, ma? 15%. So what is the formula, ma? So what is the journal entry? So depreciation account debited to which account we need to pass, ma? We need to pass the provision for depreciation account. Which side we need to record? In the provision for depreciation account, credit side. So on which date, ma? Year end. What is the year end? 31st 12 2018. 19, sorry guys. 2019 by depreciation. How much, ma? So on the value of asset, what is the total value of asset? 1 lakh. So 1 lakh into 15%, that is equal to how much, ma? 15,000 rupees. And this balance where we need to transfer, ma? These are the provision balances. We need to transfer to the balance sheet. The same date 31st 12 2019 To balance carry down. How much amma? 15,000. Close this particular account. And again, what is the starting date ma? 1/1/2020. By balance brought down 15,000. Okay now. Here there is any entry we need to record ma. So we need to close this account also. What is the ending ma? 31/12/2019. By balance carried down. That is equal to how much amma? 1 lakh. If you close this one, 1 lakh and 1 lakh. Okay na guys. And what is the starting date ma again? 1/1/2020. To balance brought down. How much amma? 1 lakh. So second year, we have started the second year. In the second year, in middle of the year 1/7/2020, we have purchased one asset. How much amma? 1,50,000. So if you purchase the asset, what is the entry? Asset account debited to cash or bank account. So 1/7/2020 on 1/7/2020 to cash or a bank account 1,50,000. Okay, Nama, the asset is still showing at which value? Cost value only. So here at the end of the year, we have to transfer the depreciation to the which account ma? Provision for depreciation account. What is the entry? So depreciation account debited to provision for depreciation. Once again, 31/12/2021. Sorry guys, 2020. So by depreciation. By depreciation. So how to calculate this one now? On 1 lakh total 15% will be calculated. When coming to the 1,50,000 into 15% into 6/12, that is equal to how much amma? So here 10,000. Here 1,50,000 divided by 2, that is equal to 75,000. So 10,000 17,500. How much amma? 17,500. Okay guys, what is the total amma now? 15,000 plus 17,500. 32,500. So to balance carried on 31/12/2020. So how much amma? 32,500. And again on 1/1/2021 by balance brought down 32,500. So close this account also amma. So what is the total amma? 2,50,000. Here also how much amma? 2,50,000. So what is the balance? On 31/12/2020 by balance carried on 2,50,000. And here to balance brought down 2,50,000 on 1/1/2021. Sir, in the current year, what happened amma? When coming to the current year, On 31st 12 2021 means which year ending amma? Current year ending. We have sold the asset which was purchased on 1/1/2019. That means first asset we have sold. For how much amma? We have sold for 50,000. Okay na? So up to the year ending also we have to charge the depreciation. We should not charge, sir. We have to charge the depreciation. So first charge the depreciation amma. So on 31st to 12 2021 by depreciation, straight away can I write like this ma? So 2,50,000 into 10%. Yes, no? So what is the balance amma? 32,000 plus 2,500. 57,500. To balance carried on 31st 12 21. Now when coming to this one, we have sold na. Just a second guys, just a minute amma. So we have to we should not pass total to the balance and carried on. Sir, here if you see this one, normally the cost of the asset will be in a same account and depreciation also in a same account when we are following without provision means. So here if you see, the cost is presented in the machinery account and depreciation is presented in which account amma? Provision account. Both are in a same place or different places, sir. Both are in a different places. We cannot find out the profit or loss. If both are in a same account means we can find out the profit or loss. Like that, what we can do amma? Sir, if you want to go means there should be a car and driver. If you want to go somewhere means, so while driving the car means the car should be there and driver should be there. But here if you want to go somewhere, here the car is somewhere and driver is somewhere. So we cannot go to the destination. We cannot reach to the destination. We have to bring the car and the driver in one place. So in order to bring the car and driver in one place, we have to prepare which account amma? Machinery disposal account. Now normally the asset balance will be on the which side ma? Debit side. The depreciation balance will be on the which side ma? Credit side. So in the same way, if we have to bring, so here in the machinery disposal account, machinery account should be on the debit side means, so here what we have to write ma? To machinery we have to write ma? So here to machinery means in the machinery account which side we have to write the disposal amma? In the machinery account we have to write the disposal. Can you check the depreciation for 31st 12 2020? Yeah. No, yes ma. 1 lakh. Oh, sorry guys. 1 lakh into 15% na? Okay. I have imagined the 10% is. Guys, okay. Just wait a second guys. This amount should be wrong. 1 lakh into 15% is M plus. How much amma? What is the another machine we have purchased? 1,50,000 into 15% into 6/12. 1,50,000 into 15% into 6 divided by 12. 11,250 plus 15,000. 26,250 plus 17,500. 43,750. Now it's fine ma? Yes, 43,750. The balance is called 43,750. Okay. So in the current year depreciation, what is the current year depreciation amma? The total we are having how much? 2,50,000 into 15%. 37,500 plus 43,750, 81,250. Okay, calculation mistake, no problem. 81,250. Okay, ma. Now what is our main target? Our main target is to bring the cost at one place and depreciation is also one place. For that reason, we are transferring from one asset to another asset, means the asset value will be decreases. So decreases means which side we need to record, ma? Credit side. So on which, what is the date, ma? 31st 12 2021 by mission disposal account. Are you getting the point? We are taking the cost and depreciation at same place. Okay, now cost should be on which side, ma? Debit side. There in the mission disposal account, debit side means here in the mission account, which side? Credit side. So which asset we are going to sell? We are going to sell the first asset. Only 1 lakh I am going to transfer. So the balance will be the balancing figure same, ma. So the balance carried on how much? 1,50,000. So 2,50,000 and 2,50,000. The further only 1,50,000 will be continued. So here when coming to the mission at disposal, what we need to do, ma? On 31st 12 2021 or 2, ma? 2021 to mission account. How much, ma? 1 lakh. When coming to the mission provision for depreciation, so here we are having the 3 years that asset. Yes or no? What is the value of that asset, ma? 1,50,000. In the first year, how much? 15,000 depreciation. Second year, 15,000. Third depreciation. Third year also how much, amma? Third year also full year or half year, amma? Full year. Can you say the total 3 years depreciation amount, amma? Total 3 years depreciation amount is equal to how much? 45,000. So now what we need to do, amma? To mission disposal. 15,000 into 3 years, that is equal to 40,000. So 31st 12 2021. On the same day, can you say the balancing figure, amma? So 87,250 minus 45,000. So 42,250 is the balancing figure. This 42,250 belongs to which asset, amma? Second asset. So now to mission disposal asset means in the mission disposal account, which side? Credit side. On the same day, 31st 12 2021 by provision for mission, provision for depreciation. Amounts to how much, amma? 45,000. Now, what is the sale value, amma? How much value we are going to sell, ma, now? We are going to sell at 50,000. Can you say the actual value now? We are going to find out the profit or loss, or nothing worry. Whatever the balancing figure will be the profit or loss. So which side, amma? Buy cash or bank? How much? 50,000. So this account we need to close. That is equal to how much, amma? 1 lakh. And here also how much? 1 lakh. The balancing figure 5,000 is called as what, ma? P&L account. So like this we need to do. Sir, there and Chandrasekhar 5,000 loss. Yes, ma. And Chandrasekhar 5,000 loss. Yes, ma. So that thing we need to transfer to the P&L account. I think you are got the clear picture about the provision. So there is a final question we have to do. Joy Limited, a chemical producing company, changed the semi-automatic component into the existing mission with a fully automatic component, incurring 85,000. Sir, what's our Joy Limited is having a chemical producing company. So in that chemical producing company, they're having semi-automatic component mission. Okay, now they are changing that semi-automatic component mission to the fully automatic component. Fully automatic component by incurring how much, amma? 85,000. So changing the fully automatic to semi-automatic means it is a normal thing. we should not call it as a capital expenditure. We have to see what ma, whether there is any increase in the capacity. Yes, the new component would result to the increasing the output of 150%. So normally if they're producing 10 units means into 150% means how much amount? That is equal to 15 units or 25 units. I think so. 10 into 150%. So they are going to produce how much? 15 units extra. So that means total production is equal to how much? 25 units. That means efficiency is there or not there? Yes. If any expenditure incurred with related to the asset and increasing the efficiency means we are going to call it as what? Capital expenditure. So what is the accounting treatment of capital expenditure? We have discussed in the capital and revenue chapter. Yes or no? What we need to do? We need to add back to the asset. That means this 85,000 we need to add back to the asset. So next, the component changing exercise required the company to dismantle the part of the machine. So in order to change this semi-automatic to fully automatic, we have to dismantle the machine and also react. React means what and also we have to assemble. We have to dismantle and we have to assemble. For this, which is company incur 38,000. How should the cost to be treated as AS10? Sir, as per AS10, only 85,000 belongs to the PPE because of it, we should not consider. So my conclusion is 85,000 will be added to PPE. Can you say the entry, Amma? PPE account debited to cash or bank account. And 38,000 is a normal expenses will be transferred to the P&L account. So 38,000 will be debited to P&L account. Okay, so in the P&L account debited means what is the journal entry? P&L account debited to maintenance account. So this is the most important question. So they may ask this type of questions in the examinations. So we have totally covered all the questions related to the AS10. We have completely discussed about what? We completely discussed about the AS10 depreciation, applicability, non-plan. So what is the main difference between the clear picture about the differences between the which things, the differences between the PPE, parallel plant and biological assets. So at last we are about to see what differences between AS10 and Ind AS 16. So Ind AS 16 is also a same PPM. They may ask in the examination. Please remember these differences. So please at least remember how many differences? 4 to 5 differences. Okay now. So I will say some of the differences. First one is called as what? We have seen the component approach na? Yes or no? Component approach. What is the meaning of component method of depreciation? If you know the separate life and separate cost of the asset, we can do the depreciation as a component wise. We can use the depreciation as what? Component wise. That component approach is followed in a AS 16, does not require any adoption of component approaches. That means what here? Adoption of component is not required. So who is compulsion here? AS 16 is a compulsion. And next one, it does not exclude the accounting for the real estate developers. It excludes the accounting for the real estate developers. When coming to the real estate developers, sir, here when coming to the non-current asset, there is a one kind of asset means is called as construction. Under construction means we are going to call it as development asset. So here when coming to the AS10, that development asset will be forming part. Excludes means what? We are not be forming part. When coming to the AS, in AS 16, they will discuss completely about the development also. Development means under construction. So here as what? Forming part of PPE as per AS 16. But here we are going to exclude. Next, specific recognition criteria for a fixed asset are laid out. Here there is no specific recognition criteria. So if you observe, generally they have they have talked about the rules and regulations, but the specification created in AS 16, but there is no specification created in AS 10. So like that you can see all this, and it does not deal with the assets held under the sale. They deal with the fixed assets which have been put for sale and that have been retained from the active use. So 4 to 5 differences like that, and easily you can write in the examinations. So if you want to, you can know the better differences, we have to study what AS in AS 16 complete. Okay na? So for that reason I am leaving it off for your sake, and you have to revise while going to the, before going to the examination. So this is the overall discussion about the AS 10 and AS 16 in AS 16. So I have discussed about the depreciation topic full, upward revaluation, downward revaluation we have covered, and methods also we have covered. What is the meaning of depreciation we have covered, and definition, clear picture about the total standards I have covered. I will share these notes, and it will